Time for our market monitor. He's investing in mid-cap stocks. He's got a 5-star rated fund by Morningstar. His fund is up 14% so far this year, easily outpacing the broader market. We welcome back Stephen DeNichilo. He is portfolio manager at the Federated Kaufman Fund. Stephen, good to see you again. Welcome back.
Hey, great to see you. Thanks for having me.
These mid-caps now, I mean, I keep hearing that people are expecting the small caps and the mid-caps to outperform in the second half. Maybe the large caps have become too expensive, trade worries, all those things. Is that what you're looking at here as well?
Right. Well, actually, I think the appropriate way to look at it is not so much small versus mid versus large, but is actually value versus growth. Right now, we're coming off and this is the last day of the second quarter from a trading perspective. We're coming off of 7 consecutive quarters of accelerating GDP on a year-over-year rate. We have never had that type of growth before. It's only happened one other time since the 1940s. So in that environment, everything has won, right? We've had low volatility, high growth, and an accelerating economy. Now, while we don't think the economy is necessarily slowing, it's still going to be good. That rate of change is going to slow, meaning we're going to be getting better, but at a slower rate. In that environment, coupled with higher interest rates, typically growth stocks outperform. Companies where you don't need to worry about who's president, trade wars, interest rates, what's going on in the government. These are companies that are creating their own innovative solutions and helping customers make money and improve their own efforts.
So let's talk about, you gave us 3 picks. I don't know if I'm going to pronounce this correctly, but it's a play on the electric vehicle growth. Albemarle Corporation?
Correct.
ALB?
Absolutely. Look, we are at the dawn of a revolution in electric vehicles. Electric vehicles, for all the press they get with Tesla, are only 1% of overall new car sales in the world. We think that 1% is going to go to 10 to 12% over the next 5 to 7 years. Electric vehicle sales globally are up over 50% in 2018. You're going to need a lot of lithium. Right now, there's this narrative on Wall Street that says lithium is oversupplied. We don't think that's the case. This is a specialty material, not a commodity, and Albemarle is the most profitable point of the value chain to invest in electric vehicles today.
Couple of seconds left to talk about these other 2 companies, which are similar in business model. You've got Tyler Technologies and Viva Systems, sort of like Salesforce, I guess, huh?
Absolutely like Salesforce. Look, the comparison between the two is they make governments and life sciences companies more efficient. They make their sales process better and more efficient. Both companies have very high customer retention rate and very high recurring revenue. So again, in this volatile time, and look, 2018 is already twice as volatile as we saw in 2017, you're going to need companies that have high recurring revenue and good line of sight into growth.
Very good. Stephen DeNichilo with Federated Kaufman Fund.